we helped to reduce that liability or that tax bill that she attracted with the sale of her commercial property. So I'll tell you an example of Dr. Amin. She is an optometrist who's been thinking about retirement and winding down her practice. And one of the issues she has is she has an old house that's been converted into her practice, and that's owned within her professional corporation. So she decided to sell that house as part of her winding down exercise. She's able to lease the property back for a couple of years. She can, until she's ready to fully retire, or sell her list of clients to someone else, but the house doesn't need to be there. Problem is that house she bought it quite cheaply when she first set up her practice. That house has now attracted quite a large capital gain within her corporation. So we were brought in to help her see if we could help mitigate that big capital gain that occurred within her practice. So she's been practicing since she started practicing back in 1991. She's now in her 60s. She's built up a nice, significant RSP. We did all of our calculations, and she was able to. There's another nuance with IPPs that I haven't mentioned is we're able to backdate these plans. So when someone sets one up, we're not just looking at contributions for the year 2025. We can also go back to the date of incorporation for that individual. And we literally
Oh,
go
wow.
back. Yeah. So it's a really cool feature. We go back each year by year. So we went back to 1991 and said, okay, how much pension should Dr. Min have earned in 1991? How much money do we have to have in the plan in today's dollars? And we literally add up all of those years the term we use is past service. And in Dr. Min's case, that past service cost or liability was just over $600,000. So $600,000 for buying back those years of service when she first got started and when she was incorporated, added on to for 2025, her contributions are just under 50,000. Remember I said the older you get, the higher the contributions? So it's quite favorable compared to the maximum RSP contribution for 2025 is just under 32,500. So she gets a significant bump at almost $50,000. So bottom line is we sheltered basically $650,000. She took $650,000 out of her corporation into this personal IPP, and that was a deductible expense for her corporation.